Hello, welcome to the Efficient Portfolio video to tell you a little bit about how we want to change the way in which we manage your money. Firstly, I want to remind you today how we currently manage your money. Then I want to tell you about some changes that we want to make so that we get full discretionary management of your money. And then finally, I'm going to tell you about how you can go about getting involved in these changes and really benefiting going forward. So to start with, I just want to remind you exactly how we manage your money at the moment. And that's really broken down into two stages. The first thing we do is we design the strategy for you. And we do this once we understand your tolerance to risk and the specific time frames around how you want to invest and what you need to achieve out of your investments. Once we've agreed the strategy, then and only then can we select the underlying investment funds to go into that portfolio. Research shows that 80% of the returns that you get come from the strategy designing stage. So that means that 20% of the returns you get come from whether we pick the best fund or the average fund for each of those fund selections. But annoyingly, whilst only 20% of the returns come from that area, 80% of the work for both you and us all come from the fund selection area. So what we've wanted to do for quite a long time is move towards a solution where we have a full-time discretionary fund manager managing your money at fund level. But we've never been able to recommend this in the past because it's always added an extra layer of cost that we've never felt was justified. That is until we found a company called Metrix. But what we've been able to do with them is find a solution where we don't add an extra layer of cost for you. And we can do that in a way that is very similar to the way in which we manage your money at the moment, but with an extra level. So in the past you filled out a risk profile questionnaire. Today we would need you to fill out a behavioural finance questionnaire. It may seem similar to you, but actually it gives us a much more detailed investment profile for you. Once we've got that, we can build and tailor the portfolio with your input to make sure it's exactly what we're trying to achieve. And then finally, we can then delegate that money to Portfolio Metrix to manage it going forward. I sit on investment forum with them, which means that I can still influence and understand in great detail the investment decisions that they're making with your money. But then at our annual review, we can check to see that the performance they're getting is of the quality that we expected, and also we can tweak and redesign your strategy if need be to meet your ever-evolving needs. So in other words, once we've built and tailored the portfolio so that it reflects exactly what you need, that's when we can design the strategy, and then finally Portfolio Metrix can then understand that strategy and design the portfolio that's inside it. Now, one of the reasons why we like Portfolio Metrix is because they're very closely aligned to the ethics and ethos of the way in which we've managed money for the last few years. We've always managed money with the main principle of the modern portfolio theory. That's a fantastic theory because what it does is it looks at all of the different asset classes, and for any given level of risk, it will provide you with a blend of investments to give you the best returns possible. The only problem with it is it's purely historical looking. We've tried to look forward and tilt the portfolio, for example, when we took gilts out of the portfolio last year. But it's always been down to our own mindset of the market. Portfolio Metrix use an extra added on theory called the Black-Litterman theory. That effectively allows them to look forward with the portfolio and say, okay, modern portfolio theory suggests a portfolio like this, but actually because of where we are in the economic cycle, we want to lose that bit and have greater resource in that area there. We already rebalance your portfolio for you. We do that either quarterly when we make other investment changes or on an annual basis when we see you at your review. Rebalancing, as a reminder, is the process by which if you've got several different funds in the portfolio and the higher risk ones grow faster than the lower risk ones, gradually over time the portfolio is becoming higher risk. Rebalancing is about resetting those percentages so that we reset back to the original risk level. We do that at set points in the calendar year, but Portfolio Metrix have the systems in place to do that as and when certain markets hit certain triggers. That means that they're rebalancing at the optimum time. So shortly after markets have gone up will be when they rebalance the different assets. Trigger rebalancing is shown to add between 0.25 and 0.5% extra growth each year, as you can see in the chart. Now sadly, when we spoke to Scandia and True Potential about linking up to portfolio metrics, it became apparent that neither were going to be in a position to be able to do that because of technology restraints and also because of where their corporate drive is taking them. So if we want to link up to portfolio metrics, we've had to find a new platform within which we can house your investments. So what we've done is we've gone off and researched the market, and we've decided that we think that the best platform available on the market to you at the moment is the Wealthtime platform. It still gives you full online access for full valuations, and it's probably the most diverse platform on the market today. But one of the key factors is it's also one of the lowest charging platforms available. You'll see here the dotted blue line is the Wealthtime charges, the dotted green line is the Scandia charges, and the dotted orange line are the True Potential charges. What you will notice is, particularly for portfolios over 300,000, the Wealthtime platform becomes an extremely cheap way to access the platform technology that is so important in managing your money. So in summary, by moving your money into an environment where we can use portfolio metrics to manage it, we can design you a much more bespoke portfolio rather than putting you into the modern portfolios that we currently do. So that will be bespoke to your specific needs and timeframes. Once we're in that environment, you're going to get extra investment expertise from portfolio metrics being involved. Equally, you're going to get the extra research and time that they can spend on your portfolio. But also you get a much better contingency plan. If something was to happen to me or Efficient Portfolio, then your money will continue to be managed in exactly the same way as it was the day before. And it will mean that there are no rash and rush decisions that you need to make, because the underlying investments will continue to be managed effectively. Once you're in that environment, we expect you to get greater investment returns, partly because of the investment rebalancing, the trigger rebalancing that we've already described, but also because portfolio metrics get access to institutional funds that retail investors don't normally get access to, and also because of the Black Litterman process, the ability to have the portfolio looking forward rather than just historically. And we believe that will enhance the returns for the future. The ongoing costs will remain about the same, and I'll come on to that in a minute. And you'll also be on the most diverse and what we believe the best platform available on the market today. So in this new environment, we're going to have a series of different charges that all total up to roughly what you're currently paying in your investment solution. We're going to have the Wealthtime fee at 0.3%. That's the fee that comes down gradually and more the more you invest over 300,000. We're then going to have the portfolio metrics fee at 0.42%. Then inside the portfolio, we're going to have a range of different funds. Now this is the fee that is going to vary depending on the portfolio that is designed specifically for you. But if you end up with a middle-of-the-road, balanced managed, middle risk fund, then that's likely to be just under 0.6%. That's going to bring in a total expense for the portfolio of 1.31%. And that is pretty much exactly the same as what you're paying in the current Scandia managed environment, and also in the True Potential managed environment that we currently manage your portfolios on. Now, in the past, when we've set up new investments for you, we've charged 3% on the first 100,000, 2% on the next 200,000, 1.7% on the next 700,000, and 0.7% thereafter. I've said to you in the past probably that I don't like charging money twice, but sadly in this instance we are going to have to make some charge because we've got a lot of clients to move over from one environment to the new environment. So what we've been able to do is, rather than charging our original investment fees, we've been able to put together a package where we can only have to charge 0.25% of your investment to move this money. We believe that will be somewhere between 1/4 and 1/2 of the extra growth you get in the first year. Obviously all the years thereafter you will benefit from all the extra growth. In order to get you involved with this new investment strategy, we need you to go through a series of different processes. If you haven't already done so, we need you to complete the behavioural finance questionnaire. Once you've done that, we'll send you a bespoke report that tells you a bit about your own investment profile. Once we've got that, then we can go about building and designing the portfolio strategy for you. At that stage, we will need your input because we want to make sure that that portfolio aligns with all of your profile and goals. Once we've achieved that and we've agreed that portfolio, then we can draft all the paperwork to send to you, and that will be pre-populated paperwork to ensure that you have to only put a minimal amount of information in and sign on the correct pages. We'll also send you a guide as to how to complete that paperwork. Once we've got that paperwork back, we will process that, and that will allow us to move your money from the current platform across to the Wealthhtime platform, and then get Portfolio Metrix moving the money into the investments that they want to manage for you. It will mean that you're out of the market for probably about 3 or 4 days. Obviously, if the markets go up or down in that time, it could advantage you or disadvantage you, but sadly that is the only way we can facilitate that. Once you're invested in that solution, then you'll be sent some letters from Wealthhtime. The key one will be about your online registration. That online registration letter is valid for 30 days, so you do need to trigger that by logging on, even if you only then use it sporadically thereafter. That will be fine. If you've got any questions about this process, we've attached a frequently asked questions document. If any of the questions you've got aren't on that document, then please either email me or call the office and ask to speak to Toby or Emma, who'll be handling this process. We've also put on some evening seminars with a view to talking you through this in person, answering any questions, and also helping you with the paperwork. In our Rutland office, they're going to happen on the 12th and the 28th of November, and in our London office, they're going to happen on the 27th of November. So if you would like to come along to that, please do. It just leaves me to say thank you very much for watching this video. I passionately believe that this is the best way that we can manage your money for many, many years to come. I really hope that you think that this will improve the way in which we manage your finances, and if you've got any questions, please do come and ask us. Thank you very much, and I look forward to seeing you at your next annual review. Goodbye.